Look, it's impossible to get away from the I word. If you go to Google Trends, I love to go to Google Trends, put in the word inflation. That goes back to 2004. Never, ever has actually folks searched the word inflation more since 2004 than they are today. So the reality is, it is for real. It's on people's minds. Here's how I would think about it. I think there's two types of smoke that come from the economy's car. One type of smoke is when you squeal the tires and you smoke those tires as you re-enter a recovery. That's one type of smoke. The other type of smoke is when you overheat the economic engine. So the question is, are we getting the type of smoke that's overheating the engine, or are we getting the type where we are squealing the tires to get onto the recovery highway? I think it's the latter, right? So I think that we are seeing that sort of squealing of those tires. Why is it higher? Look, we know a lot of it. We know the recovery, but a lot of people don't factor in some of the other reasons. Record stimulus, major supply disruptions, a tight labor market we just talked about. But also a lot of people miss it. A year ago, we were a negative CPI. So therefore, the year-over-year comparisons may even look worse than it really should be. So the reality is there's component pieces here that people miss. The one thing I will say, however, is that I think there are big picture things that have been in place that have kept inflation low that will continue to be disinflationary. Technology innovations, globalization, the Amazon effect and all of it, the stuff that it brings, productivity, efficiency, automation, AI, machine learning, the high debt we carry, which is going to put downward pressure on inflation. All of those things are still in place, will continue to be in place. And those things are going to help make sure that inflation doesn't get out of control. And so I think that's the big piece that I have. The last thing I just say is, people always are asked like, well, what do I do with my portfolio on inflation? And what I usually say is, well, you need to own inflation. And a lot of the way you own inflation is with, asset prices, and that might be done with economically sensitive names, commodities, could be real estate, could be cyclicals. We think that materials and industrials seem to be poised to, benefit nicely in this recovery-led inflationary boost that we'll probably see. And I think financials could do okay because the one thing I would disagree with from Jeff is that we think that interest rates are going to begin to move a little bit further up. We think there's more room for that to move higher. And we think that even though inflation is going to probably be a bit modest going forward, we still think that there's some upward room for interest rates. And we think that might help financials. The last thing I would just say really quickly, because I'll listen to the segment that Jeff said, and maybe another segment, someone talked about owning branded franchise, which I agree 100%. You own blue chip names, large cap names, branded franchises. These companies have pricing power. And that's the other piece that you want to start to make sure you invest in is companies that have the pricing power. Many of the small cap names are further down the supply spectrum. They don't have pricing power. They're being told what those prices are. Larger branded franchises have that ability.